How can one invest during a recession? How can someone potentially become rich during a recession? As inflation remains high, the stock market faces challenges, and the gross domestic product, GDP, declines. Experts are discussing the possibility of the U.S. heading into a recession. While the certainty of this situation is still uncertain, there are proactive steps that can be taken to position investments and navigate through challenging economic conditions. Watch this video as we talk about investing during a recession and share tips on how you can increase your chances of becoming wealthy. So, let's get into the video. As of now, the United States has not officially entered a recession. The National Bureau of Economic Research, NBER, an independent nonprofit organization responsible for determining recessions, awaits sufficient data before making a declaration. According to NBER, a recession is characterized by a significant and widespread decline in economic activity lasting for more than a few months. Although the U.S. experienced negative GDP growth in the first and second quarters of 2022, negative 1.6% and negative 0.6% respectively, it is crucial to note that this alone does not signify a recession. Experts point out that the decline in GDP was primarily driven by supply chain disruptions, with inventory adjustments and net trade accounting for most of the negative growth. Michelle Griffith, a wealth advisor at Citi Global Wealth, suggests that a significant decline in economic activity has not occurred yet, which is a requirement for a recession according to NBER's definition. By following these 6 tips, you can increase your chances of building wealth during a recession. 1. Invest as much as you can. One way to become rich during a recession is by investing a lot of money in the stock market. When there's a recession, the stock market doesn't do well. People spend less money, and companies make less money too. This makes investors worried, and some of them sell their stocks because they're scared or need the money. But if you have money to invest, it's a great opportunity. Stock prices can go down by 20% to 30% or even more. Even though it might seem risky, the stock market has always recovered after recessions. If you invest more money when prices are low, you can buy stocks at a cheaper price. Then, when the market gets better, you can earn a lot of money. 2. Investing in defensive stocks. When the economy is flourishing, consumer discretionary stocks tend to perform well as they are influenced by economic cycles and consumer confidence. However, during a recession, defensive stocks in non-cyclical sectors, such as utility stocks and consumer staple stocks, offer more stability. These sectors provide essential services and goods that people need regardless of the economic conditions. Consumer staples, including food and household products, have consistent demand even in a downturn. Utilities also tend to remain resilient, making them outperform other sectors in a recession. Additionally, the healthcare sector shows stability throughout different economic cycles, and healthcare employment even tends to increase during severe economic downturns, as noted by NBER analysts in a 2021 report. 3. Dollar cost averaging in a recession. Dollar cost averaging is a beneficial strategy during a recession as it involves regularly purchasing a fixed amount of an investment, taking advantage of lower prices. 4. Quality assets. To protect your portfolio, focus on quality assets with low beta, high returns, and low leverage across different asset classes. Companies with recurring revenue, such as subscription-based models, are less susceptible to economic downturns. 5. Cash rules. According to Michelle Griffith, a wealth advisor at Citi Global Wealth, having cash on hand is crucial during an economic downturn. As companies reduce spending and job losses increase, it is better to be cautious and increase your cash reserves when employment rates are high. Nonetheless, selling your investments to obtain cash in anticipation of a recession can be risky. There's a chance you might sell too early and miss out on market gains. A better approach is to shift your investments into assets that are well-positioned to withstand a recession. That's why it's always a smart move to keep a portion of your portfolio in cash or easily accessible securities, such as a money market mutual fund. 6. Avoid growth stocks. During a recession, it's advisable to avoid growth stocks, especially those with high growth prospects but no profitability. Instead, consider investments that generate income and offer dividend payments, allowing for dollar cost averaging opportunities. Actively managed funds have historically outperformed their peers in down markets. In terms of fixed income, investment-grade bonds are considered a safe haven during recessions. However, it's essential to be cautious of rising defaults. Additionally, exploring uncorrelated assets, such as royalties and insurance-linked securities, may provide resilience when traditional asset classes face weaknesses. Investing in these fields during the recession of 2023 has the potential to yield significant outcomes and enhance your wealth. What do you think about these investment strategies during the upcoming 2023 recession? How do you believe they can help you make money?